Everyone, welcome to today's fundamentals. Hello, Peter.
Hello.
A new day, a new week. How have the markets been behaving?
Well, it seems that the US dollar was on the back foot. We had the release of the US employment report for December. That was on Friday. Now, the rates and figures released show that practically the US employment market remains quite tight. It was characteristic that the unemployment rate dropped. The NFP figure also dropped, but less well than what was expected. So overall, there seems to be a tight employment market in the US, which could be, I would say, be giving a breath of life to the idea of the Fed that a soft landing for the US economy from the monetary policy tightening is actually possible. And that's the big takeaway. On the other hand, we have to note that the tight employment market more or less tends to allow the Fed to continue on its hawkish path. Yet, in our opinion, we expect the Fed to start easing. I would be noting that in the coming week, the attention would be falling mostly on the release of the US CPI rates for December. And should we see a slowdown of the CPI rates, we may more or less expect the easing of the Fed, or at least the market expectations for an easing of the Fed's hawkish stance to be enhanced.
And what about US stock markets?
Well, US stock markets, I think we're on the rise. We have to bear in mind here that in the coming week, we're going to be entering the earnings season. So we're going to be seeing interest being elevated for US stocks. At the same time, the expectations for an easing of the Fed's rate hiking path more or less tended to provide a boost. The reopening of China also tended to make the markets a little bit more optimistic, which more or less tended to provide further support for US stock markets. So overall, I would dare to say that more or less things are in the green.
And did gold's price rise further yesterday?
Actually, it did. The gold's price seems to be benefiting from USD's weakening. We expect the negative correlation between the two trading instruments to be maintained. And in that case, should the US dollar continue to weaken, we may see gold's price advancing further.
And how about the euro area?
Well, the euro area is... Now, on the one hand, we have some positive signals, which, on the other hand, though, are not so conclusive yet. And given that we have still some way to go for the ECB to continue tightening its monetary policy, I think the situation is still rather fluid in the Eurozone. On the positive side, we have a very soft winter in the Eurozone, and that tended to keep heating costs and energy costs rather low. So practically Europe was rather saved by the soft winter, for the time being at least. And should that be maintained, we may see the euro getting some support, as the financial data for the time being seem to be not as bad as was expected.
And what's in the calendar for today?
Well, it's an easy Monday. I would be noting in the American session from Canada the building permits growth rate. Should there be another slowdown, actually another contraction, we may see the CAD weakening, as that would imply that BOC's monetary policy tightening has been hurting the construction sector of Canada. And during tomorrow's Asian session, I would be noting that we get from Japan Tokyo CPI rates. Now we have to understand here that due to the size and the density of population of Tokyo, the release of the CPI rates of Tokyo tend to be also foreshadowing what's to be expected for the nationwide CPI rates. Now, should we see further acceleration, that would imply that inflationary pressures within the Japanese economy are still strong and are still suggesting that some sort of tightening on behalf of BOJ is necessary.
And how about the rest of the week?
I would be starting with the monetary front tomorrow. We get a Congress in Sweden from Riksbank. where we have a number of speakers. We have BOE Governor Andrew Bailey. We have ECB board member Isabel Schnabel and BOC Governor Tiff McClem. The highlight, though, tomorrow is expected to be Fed Chairman Jerome Powell. The markets are going to be scrutinizing the speech of the Fed Chairman in order to get some more clues about the Fed's intentions, a possible slowdown of its rate hiking path, or even some rate cuts in the next year. It's going to be interesting how exactly the Fed Chairman is going to be approaching monetary policy. That would be one. I would be noting also on Wednesday from Australia, we get the CPI rates and the retail sales growth rates, especially the CPI rates. They are on a month-on-month basis. Should there be an acceleration, that could provide some support for the Aussie. On Thursday, we already noted that we're getting the US CPI rates, but we would be also noting that we're getting Australia's trade data, with lots and lots of focus being on the trade balance figure. Should there be a widened surplus, that would be a positive for the Aussie. And on Friday, I would be noting from China the trade data. Aussie traders may be focusing mostly on the import growth rate, but the rest of the market, I think, will be watching out for the trade balance as such. Should there be a widening of the trade surplus, that would be a positive, or if you prefer, another positive for the Chinese economy, and could ease the market sentiment even further. Other than that, I would be noting also from the UK the GDP rates, and from the US, we may be highlighting here the preliminary University of Michigan consumer sentiment. Should the reading rise slightly, that would imply a rather improved consumer sentiment in the US economy, which may entail higher retail sales and such.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome to the technical analysis part of the presentation for today. My name is Peter Yosef. I'm the senior market analyst at IronFX. Now, in front of your screens, you have the 4-hour chart of the US dollar index. All charts to be presented are to be of the same time frame, unless otherwise stated. Now, with no time to waste, we actually have to note here that the US dollar index has been dropping since Friday. It's been an impressive drop. And the interesting part is that it has broken also the upward trend line, which had started to form since the beginning of the month. That would be exactly on the 3rd of January. So you can see how there was a higher peak, higher trough, another higher peak, and then dropping, breaking the upward trend line, yet being shy to actually break also the S100 305. So for the time being, we switch our bullish outlook in favor of a sideways movement. For a bearish outlook, given that the RSI indicator had dropped quite low, it's currently at 39, rising slightly, but still pretty low. I would require for a bearish outlook a clear breaking of the 103.05 support line and the price action to start clearly aiming for the 102.10. Anything which remains between the spectrum of the 103.05 support line and the 104.55 resistance line seems to remain in a sideways motion. For a bullish outlook, we would require clear breaking of the R1 and the price action to start aiming for the R2 105.50. For the time being, once again, we intend to maintain a bias for a sideways motion between the R1 and the S1. Let's have a look at Euro USD. Zooming a little bit out. Let's readjust the chart. Now, this is the 4-hour chart as we have mentioned. I would like to take a look at the big picture, and therefore let's drill out to the daily chart. You can see how the price action upward movement has been broken. Sorry about that. Back to the 4-hour chart. Let's correct the S3 1.0295. Let's readjust the chart. Here we go. Beautiful. Now we can see that there is a clear sideways motion, albeit it has been widening over the past 48 hours, even a little bit before that, yet remains between the boundaries of the 1.0460 and the 1.0730. The RSI indicator was on the rise, aiming for the reading of 70, yet it's now cracking a little bit lower, which is being reflected also in the price action. So we tend to maintain our bias for the sideways motion to continue between the S2 and the R1, probably with the S1 being the midpoint here. Yet it should not be underestimated, the S1 provided a number of beautiful touches here, which should be taken care of. Now, for a bearish outlook, I would require A clear breaking of the S1, B, a clear breaking of the S2, and the price action to start aiming for the 1.0295, the S3, the third support line. On the other hand, a bullish outlook could occur easily should the price action of Euro USD break above the R1 1.0730 and start aiming for the 1.0935. Mind you that despite the correction lower, the RSI indicator is still rather high levels, it's at 60.7. So there is still some bullish residue left in the market sentiment. But given the correction lower and the fact that it has not even approached the R1, we tend to maintain our bias for sideways motion to continue. Let's have a look at cable, GBP/USD. Okay, we have a similar picture here. Some slight readjustments though should be in place. And we can see that it has broken the upper boundary here, but in my opinion, that's just a simple push higher. But here, include this one, maybe even higher, this level. Yep. Beautiful touches here. I'm keeping this as the R1, and that's the 1.2220. Let me correct the labels as well. I think also correction of the S2 is in order here. And narrowing given the sideways motion of the pair. Sorry about that. At the 1.1650. And let's correct also the S3. Nice touch here. However, let's have a look further back. Yep, could be valid. Yeah, somewhere here. And that would be the 1.1345. Readjusting the chart. So we tend to maintain a bias for sideways motion between the 1.20 to 20 resistance line and the 1.19 support line. In our opinion, that seems to be the case, despite the RSI indicator reaching pretty high. It actually reached at some point even the reading of 64.4. Yet is slowly but steadily correcting lower right now. For a bullish outlook, I would require clear breaking of the R1, 1.20 to 20, and the price action to start aiming for the 1.2345. On the other hand, should the bear stick over, we may see the price action of cable dropping, breaking the S1 1.19, and start aiming for the 1.1650, a level which provided support here, while even lower we note the 1.1345. Note the widening of the Bollinger Bands, which tend to imply higher volatility than usual, or at least than before. And that would be another indication that slowly but steadily the market has restarted its engines after the Christmas and New Year's holidays. Let's go now to USD/JPY. In a similar sideways movement, the 131.80 has worked beautifully as a support line. You can see the bounce here. Now, for the time being, we tend to maintain a bias for a sideways motion, but some could be arguing that a bullish momentum is building up. Yet for that bullish momentum to become more obvious, we would require a higher peak than this one. So in that case, I would require the price action to rise, break the 133.90 resistance line, and actually test the 135.80 resistance level. And that would allow us to have continuous higher trues and higher peaks, which in turn would be leading us to an upward trend line. So overall, for the time being, we tend to maintain a bias for sideways motion between the R1 133.90 and the 131.80. Also note the RSI indicator is running along the reading of 50. It's actually right now at 50.7. So it tends to imply also rather indecisive market, which may allow for the maintenance of a sideways motion. Mind you that the RSI the Bollinger Bands seem to be converging, also implying that volatility is slowly but steadily dropping. So that all of that tend to imply that we may be having a sideways motion here. Okay. Once again, for a bullish scenario, we would require clear breaking of the 133.90 and start aiming for the 135.80. On the other hand, should the bear stick over, I wouldn't be surprised to see the price action dropping, breaking the 131.80 and start aiming for the 129.30. Let's move now to USD/CHF, the other safe haven currency pair. some slight readjustments necessary. Let me make them. Here we are. So we observe that there is a clear sideways motion. Okay, the 0.9330 was breached a couple of times. Yet I think that's still a valid level. Also the S1 has been tested, but held its ground in this case. So the 0.9210 remains as our first support line. Note the RSI indicator, which has been dropping over the past 48 hours. Actually, since Thursday, as we had the weekend. It's currently at 39.6, which tends to imply a rather bearish sentiment on behalf of the market, which could more or less drive USD CHF lower. But for a bearish outlook, I would require clear breaking of the S1 0.9210 and the price action to start actually aiming for the S2 0.9090. It would have to be something like this. Anything which remains between the S1 0.9210 and the R2 0.9450 in this spectrum here is considered as a sideways motion. Pretty wide one, but still sideways. On the other hand, a bullish outlook would require a rise of the price action of USD/CHF and break of the R1 0.9330. I would require also a breaking of the R2 0.9440. Sorry, 0.9450. Okay, let's have a look at the Aussie against the US dollar. The Aussie, which tended to benefit substantially from the drop of the US dollar. Definitely we have to make some corrections here. So please allow. The R2 and the R1, as they have been broken, have now to be turned into support lines. And let's go hunting. Unlocking the chart. Okay, we have one level here. That would be the, in red, 0.7130. Let's go further back. Next level would be somewhere here. Beautiful touch here. And that would be the 0.7280 in red, please. Beautiful touches for the support lines and the resistance lines. So these two hold. Okay, I'm keeping that. Okay, let's readjust and make the corrections on the labels. Give me a sec. This would be the 0.7005. Let's go to the support lines now. making a start with the 0.6850, 6880, sorry. And final support line being placed now at 0.6625. Now this is an interesting chart, and the main reason is that we have a nice upward trend line guiding the pair. On the other hand, also interestingly enough, actually why? It's marking higher consecutive higher peaks. One peak, second peak, third peak, fourth peak, fifth peak. It's going higher and higher. There is a slight problem though with the higher trows, as we have 1, 2, 3. The next one though is lower, yet regains momentum. And here go. I think it's an upward momentum here. Interestingly enough, the price action corrected low after hitting the upper Bollinger Band, while the RSI indicator also corrected low after hitting the reading of 70, reaching over board levels. It's understandable. But there is still room for further correction lower, but overall the trend remains to the upside. For a bearish trend, I would require a clear breaking of the 0.6880 support line, the price action to drop, break the pre-mentioned upward trend line, break the 0.6740, and start aiming for 0.6625. Would require a lower true than this one. On the other hand, the pair could stabilize if it corrects lower and remains within the spectrum of the S1 and the S2. Excuse me. While should the bulls maintain control, we may see the price action still correcting lower, yet correcting then taking new rise, breaking this one once again, and aim, if not even breach, the R1 0.7005. For the time being, I think there's some slight bullish sentiment left in AUD/USD despite the correction lower of the pair and the RSI indicator just below the reading of 70. Let's have a look at USD CAD. It's the 4-hour chart. Okay. So we definitely have to correct two support lines which have been broken, namely the S1 1.3525 and the S2 1.3395. And let's move Okay, we have one support line which is being placed on the 1.3095 in green, which rests practically in these throws here. Let's lock this in. And the next one on this true, and that would be the green 1.2895. Let's correct also the former support lines which have been broken into resistance lines. Let's readjust. Okay. Let's correct also the labels. $1.37, $1.3525, $1.3395, S1 at 1.3230, S2 at, let me have a look, 1.3095, and final support line being placed at 1.2895. And we don't need this. Okay, that's better. So, the first question which arises is, what's the direction? For the time being, we see that the price action has broken the sideways movement which has been guiding it since around the 10th, 8th of December. And that has happened in the past 24 hours. That would be since late Friday afternoon. Actually, since the American session in the afternoon. Something which would be understandable given that we had a better than expected employment data from Canada rather than the one in the US, which even the ones in the US were not so bad. They were actually pretty good. But the Canadian ones were even better. So the CAD tended to weigh as it gained more support, forcing the pair to drop considerably, breaking the 1.3525 clearly. And during today's European session, it's currently testing the 1.3395, a level which could be lowered slightly and become a new support line. For the time being, we tend to maintain that as a breaking of the support line, so turn into a resistance line. Now, note how the RSI indicator below the 4-hour chart is just above the reading of 30. It's actually at 32.3, a level which could be considered as rather bearish. So we see the case for the bears to maintain control and actually drive the pair lower towards the 1.3230 being the next possible stop, which provided support here. But we have to note to you guys that see those chows here. This could also be another possible stop. We're taking it all the way down as low as the 1.3230. Next possible stop for the bears would be the S2, 1.3095. On the flip side, should the bulls take over, it will have to surpass the R1 1.3395 and reach the 1.3525, the next stop for the bulls, while even higher we note the 1.37. It's a very interesting pair for the time being. Once again, despite some signs of stabilization, we tend to maintain a bearish outlook. I would like to see more green candlesticks here, smaller candlesticks, before actually being convinced that the pair has stabilized. For the time being, I tend to expect that we may see more downward motion of the price action towards the 1.3230 support line. Let's have a look at NZD-USD. Big sideways motion. Okay, we have a clear breaking of the R1, 0.63. So let's correct this into the support line. Let's go hunting for a new ultimate resistance line. Okay, there's a peak here, but in my opinion that's way too narrow. I would raise it to this true here. You can see the peaks here. Let's readjust. And lock the new resistance line at the red 0.6725. Let's correct the labels. Making a start with the S3 being now set at 0.6060. S2 at 0.6155. S1 at 0.63. R1 now being placed at 0.6440. R2 being placed at 0.6570. And final resistance line being placed at 0.6725. For the time being, there seems to be still a sideways motion, despite the RSI indicator actually reaching almost at the reading of 70 and then correcting lower. So the bulls may be having it, may not. In my opinion, for a bullish outlook, we would require clear breaking of the R1 0.6440 and the price action to start aiming for the R2 0.6570. That would be a clear bullish outlook in my opinion. Otherwise, should the pair correct even lower and reach or even breach the S1, I'm still in sideways bias. I would require a lower true than this one in order for me to adopt a bearish outlook. That would imply practically that the price action has to drop, break the S1, and reach all the way down to the S2 0.6155. Okay, let's have a look now at gold's price, which has been on the rise. Interestingly enough, corrects lower during today's European session. Definitely this has to go a little bit higher. The R1 1824 becomes now a support line. Let's go hunting. Unlocking the chart. Okay. I'm going all the way with this one. In red. Have a look at 2000. Same for here. And test it here. Pretty wide. Give you that. Could go a little bit lower. At this peak here. 1960. 1958. Yep. Okay, I'm going to be a little bit more cautious here. I'm not going all the way to the 2000, or should I? Nah, let's go. 2000 is. 1920 becomes the second resistance line. 1880, the first resistance line. The S1 is now being placed at 1824. 1766. 1735. Now the direction. Note this beautiful upward trend line here. It's a nice upward trend line filled with higher truths and higher peaks. There was some hesitation here, but I think we're beyond that now. There's a nice upward trend line which actually intensifies its slope, upward slope, somewhere here. So we tend to maintain a bullish outlook. Note the RSI indicator has surpassed slightly and corrected lower, just below the reading of 70, as it had reached at some point over both levels. It was characteristic how the 1880 provided resistance here. Now, should the price action correct even lower and break the upward trend line, then we may be talking about stabilization of the pair. Of the precious metal. Should the price action though drop even below the S2, 1766, then I would be talking about a bearish outlook. For the time being, we tend to maintain a bullish outlook. I wouldn't be surprised to see the precious metals price correcting even a little bit lower before advancing once again higher. And I think the first test For the bulls would be the 1880, which provided resistance beautifully here during today's Asian and early European session. Should that be broken, the next possible stop is the 1920, with the 20,000 psychological barrier being the ultimate barrier right now for the bulls. Let's have a quick glance also at WTI, which is correcting higher. It's going to be interesting how the price action is going to be reacting and whether that's going to be supporting the price action higher above the 78 level. Note that the RSI indicator has risen, has broken above the reading of 50 and is still rising, which could be implying a bullish sentiment on behalf of the market. So that should be about it from all of us here at IronFX. Best wishes for solid trading.
Hello everyone! The term risk-off refers to the mood of traders and investors in the financial market when they want to avoid risk exposure and safeguard their funds. When traders are pessimistic about the economic outlook, they tend to sell risky assets and buy safe haven assets. In such an environment, safe haven assets like the Japanese yen and gold tend to gain in value, while high-risk assets like stocks and commodities tend to decline. Markets are frequently labeled as risk-on or risk-off. Both of them express global market sentiment. Risk-on, risk-off is frequently abbreviated as RORO. This happens when price behavior is driven by investors and traders' changes in their risk tolerance. When traders are not optimistic, then they tend to reduce leverage, selling risky assets and buying safer assets or even preferring cash. US Treasuries and German bonds are considered almost risk-free. The US dollar, Japanese yen, and the Swiss franc are safe havens and tend to rally when traders want safety during times of uncertainty. The price of gold usually increases and the yield on government bonds falls. Thank you so much for watching us today, guys. Stay tuned. Bye-bye.
Hello, hey guys, hi. Hey, hi Arun, hi Juha, hey hello Namdi, hello Ronald, hello Stephen, and hi to the rest. Hey, thank you very much for joining today on another IronFX webinar series. Hey, give it a moment for the others to join before we begin this webinar. Okay, give it a moment. Okay. Okay, let us begin. Okay, welcome. There are more people joining. Thank you very much. Hey, let me know where you guys are tuning in from. Where are you guys from? Well, for me, I'm from Singapore. It's around, okay, it's 6 p.m. right now. 6 p.m. Oh, Nigeria, Finland, UK. Very, very nice. Wow, all over the world. Belgium. Wow, all these places. I got to go there one day. Okay, nice, nice. Let us begin. Okay, today will be very, very technical. Very, very technical on the multiple pivot point strategies. There are quite a few that I would like to share with you. So let us begin. Okay, as usual with the introduction, my name is Chen Yongjing, and I am the investment analyst for Everest Fortune Group. So we are also the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, a disclaimer first, all trading involves risk. It is possible to lose all of your capital. And the agenda for today. What are pivot points? The different types of pivot points, and what time frame should you use for pivot points? Also, we will be teaching how to add them into your strategy. So later I can ask you guys what kind of strategy you guys use, then I can see what kind of ways we can implement it into your strategy. Okay, my hair is a bit messy. Do apologize for that. Okay, what are pivot points? Okay, a pivot point is like, let's say the chart, up, down, down. So where are the pivot points? A very, very simple pivot point is the top and the bottom of the low and the high. So you can call it as the previous high or the previous low. Okay, a pivot point is an intraday technical indicator used to identify trends and reversals, mainly in equities, commodities, and the Forex markets. So all these reversals, what I like to do, I personally use something very similar to pivots. So with this, the high and the low, I like to catch that reversal back in. But of course, with some confirmation. So maybe later I can share on how I do that. Okay, pivot points are also calculated to determine levels in which the sentiment of the market could change from bullish to bearish, vice versa. Okay, the high, just take note, the high, it indicates the highest price from the prior trading day. Hey, I see more of you guys sleeping in. Hi, April. Hi, Ayman. Hello, welcome to the webinar. Okay, as I was saying, the high, hey, hello. Hi, man. Okay, as I was saying, the high indicates the highest price from the prior trading day. The low indicates the lowest price from the prior trading day. Okay, the day traders calculate pivot points to determine levels of entry, stops, and profit taking. Later, I'll be turning on trading view. So I'll show you guys the pivots, the multiple pivots. I think I'll be presenting for today. Hey, good to be here. Yes. Lucky you are here. Welcome. Annie Chukwa Kingsley. Okay, I'll be presenting today 4 different types of pivot points. The standard ones, which are the most basic ones, the Camarilla pivot points, which I think I like it. I like this pivot quite a lot. And the Fibonacci pivot points and the Woody's pivot points. So all these are just improved versions of pivot points. So the first pivot point, this one, the Camarilla pivot points. Okay, it's actually refined form of existing classic pivot points formula. developed by Nick Stott, and it's a better use of Fibonacci numbers in the calculations of levels. It's also used to calculate intraday support and resistance levels. Okay, let me open it up. Let me open the charts before we begin. Okay, just to let you guys know, also we have an IronFX YouTube channel where you can watch the live TV and the past playlist. You can take a look. You can learn quite a lot of things right here on the IronFX YouTube channel. I'll just paste it over into the chat to everyone. Okay. Okay, we start with the traditional pivots first. Okay, traditional pivots it looks very confusing. There are multiple resistance 2, 1, 1, 2, 3, 4, 5. Support 1, 2, 3, 4, 5. So it's in a way, it's very, very similar to how a Fibonacci works. So if you take a look, if I turn it off, how a Fibonacci works, can from the top all the way there. So it looks very similar. If I turn it on, you see some lines coinciding, especially this area. So it's in a way you can actually trade similarly to how you use a Fibonacci from one area to another area. Okay, this is just the traditional one. You can actually find it in the indicators under pivots. So you can actually get the pivots point standard. Okay, what's the one that I was going to present is the Camarilla pivot points. Okay, let me move the screen a bit so I can see everybody. Oh, more people are joining. Hey, welcome, man. Welcome, Hanin. I just saw you sleeping in. Okay, so we are on this. Okay, so for resistance, for these pivot points, for this pivot, the karma, let me type it out. Okay, excuse my pronunciation. Karma Villa pivots points. Okay, so with this, we have the supports 1, support 2, supports 1, support 2, support 3, support 4. Okay, you said that the email said start time was 10 a.m. GMT. Yes, it's right now it's 10 a.m. GMT. It's 6 p.m. Well, for my timing, it's 6 p.m. GMT plus 8. So it's slightly different. No, it's 11 a.m. I think, can you please, Stephen, can you please say what you meant against? I think I'm a bit confused at your statement. Okay, it's at Mr. Camarilla pivot point. Okay, so we also have the resistance 1, resistance 2, 3, and 4. So what I like about this is I actually noticed that you can actually backtest with backtest. You can buy from the resistance. You can buy from the support and with the stop loss below. So example like this. Okay, now is 11 a.m. Email said it will start at 10 a.m. Okay. I'm not sure about that. I think it might have been the IronFX email site issue. GMT timing, just let me clear this up. Now it's 11 a.m. GM email said it will start at 10 a.m. Well, I think it's the GMT plus 0. Do you mean that? Stephen. Okay, give me a moment. Okay, let us continue. I think I'll get back to you regarding that again later on. Okay, so yesterday I was actually in a EU shorts. Oh, you are in summertime. Okay, okay. I think I'm a bit confused on the timing too. Later I'll check it out. Okay, so what do we have? Give me a moment. Okay, so we have this area. You can see this area. This is the support 2. It bounced up and it actually coincides with an area where I was actually trading yesterday. So I was actually in a short. I was in a short over here, somewhere here, with my take profit 1 here and take profit 2 at this candle right here. But my final take profit didn't got hit. Well, it's fine. Later I'll explain this trade out also. So I actually like this pivot point a lot, this Kamariga pivot point. So you can see on as soon as the what do you call it, the supports for, this is the support for the previous day, or the resistance for that it gets broken, you normally trade with the trend. So when price goes below it, they continue selling downwards or upwards. So this one, it's the support for that is broken. Let me make it smaller a bit. Okay, let's take a look at old data for some back testing. So you can see here, resistance 4 broken, price continues going upwards. So I'm sure you guys are thinking right now, why not I set a buy stop here, a buy stop with my stop loss at the bottom, maybe here at resistance 3 for price to continue going upwards. Isn't it possible? Please, audio echoing. Okay, let me test the mic. Hi, mic test. I think someone is having issues. Can you hear me clearly? Can you guys hear me clearly? Where will this recording be uploaded? Not here, all clear, no audio issue. Okay, this audio recording, they might upload to the IronFX YouTube channel. They might. So I remembered I saw my, let me take a look. Okay, all clear. So I think for you, for audio Kyun, it might be your speaker issue, or you might want to use a earpiece regarding this echoing issue that you might have. So they okay, no problem. Hey, thank you. Okay, nice. Let us continue. Okay, so they might actually upload it on YouTube. I saw my previous live trading analysis was uploaded online too. So it might take a few days. Give them some time to upload. So let me clear these things out. Okay. So some of you guys are thinking probably I can set a short position right here. Upon breaking the support 4, my stop loss, to be safe, I can set it at the supports 1 and let price continue downwards with, at least as usual, a minimum of 1-to-1 risk to reward. Minimum 1-to-1. Never go lower than that. You will be, especially 0.8, all this, just ignore. Do not take a trade. So we can see, let us see by the end of this session where price on the euro dollar might be heading to, since it has already broken the supports for pivots. So for this, right, coming back here, just now the back test, to have a safe, very safe one, we have our stop loss at the first resistance, the red line. Wow, even more people are joining. Wow, we have quite a lot of people today. Okay, let us move on here too. Okay, this is a scenario that it did not work out well. So you're taking a shot. You're taking a shot. Let's say you take a shot here, a stop shot. Okay, it's not here. Okay, it's here. This scenario did not work out. So with your stop loss there, and then the maximum it even went was in a negative risk to reward before price reversed all the way up. So you cannot just trade solely based on one indicator, especially the pivot indicator. It's best to combine multiple forms of indicators or your own trading methods before you enter a trade. This is a very good example of a beginner mistake. If you actually enter it right here, and then it just hits your stop loss, although you have a fairly wide stop loss. So let's continue. Okay, another area is here. Price goes up, maximum it did when, okay, at least nice. It was a 1-to-1 right here, at least. So always, I have a question. Do you use the automatic trading? Answer live. Okay, you were asking you want to do this automatic trading. You want to use this automatic trading. No, I actually don't use automatic trading. I use something called, this is my personal trading method, Smart Money Concepts. Just send it out into chats. So I usually use that, Hanin. I use Smart Money Concepts as a confirmation together with market imbalance. I stress that a lot, especially the amount of risk that I'm using. I only risk 1% per trade. So I don't go for those 5% trades where after, so let's say you risk 5% per trade. It takes you 20 losing trades to actually blow your entire account. With 1%, it gives me more time to cover back if I'm in a loss. And it actually takes 100 trades before you blow your account. So if you actually blow your account risking 1%, I think you need to rethink your decision on trading or to just take a step back and start to study more. Okay, I'm not seeing, okay, nice. Okay, here is another example of how it didn't work out. I'm just showing you guys things that don't work out and how it works out, just in case you guys decide to just do a stop, just follow using the indicator and then it hits your stop loss. So this is another scenario where it didn't work out. Always look to the left of the charts, especially here. Do you have a robot? No, I do not use a robot. I don't trade using a robot. I trade using a naked chart, actually. A naked chart. So what do I mean by a naked chart? I do not use any indicators when I am trading. Later, I will open up my personal chart layout. You can see. So I actually have my personal chart layout right here, where I'll show you later. There's 0 indicators involved. Okay, moving up. So you can actually see the win rate just following this. Camarilla pivot point is not that accurate. People can actually reverse price actually for this scenario, price reverse. This scenario, price reverse. For this, price went kind of right before it reversed. Okay, this is another scenario. It didn't work out. The overall trend is bearish. But then this area broke. You try to short. You try to short. Okay, it worked quite well. This is working well. The stop loss there. It's very wide. You get a 1-to-1, but it took quite long. I don't like holding trades for a long period of time. So how long did it take to even hit a 1-to-1? Wow, this is a very long trade if you're actually in it. Wow, it took 3 days, 13 hours just by using a self stop, man. That's very, very long. Same thing with this. Wow. It took very, very long for a one-to-one trade. Okay, just in summary, don't just use a sell stop. Use some kind of confirmation before you enter, and also to minimize your risk to reward. Okay, this took 1 day, 2 hours. It's quite long, man. Okay, let's move on to the others. Let's move on to the other. Let's carry on with the presentation. Okay. Next, we have the Fibonacci. Okay, there's one more person with a question. Do you have a group to do smart money concepts together? Let me answer this live. Okay, do you have a group to do the smart money concepts together? Unfortunately, no. Actually, I don't. I learn it online, and then I have friends in real life who I actually discuss smart money concepts with, and then he's actually better than me at smart money concepts at the time of my learning. So I guess it's working pretty well. The concepts are pretty okay to understand, pretty easy to understand for me compared to other methods. What method do you use, Hanin? What method do you use for trading? Hey guys, just send into the chat what methods do you use for trading. I'm quite interested since we have quite a lot of people. The diversity of trading methods should be a lot. Regardless whether you guys are new to trading or price action. Akuma, you use price action. So do you trade like, do you know who is Raja Banks? Do you trade like him? Okay, next we have the Fibonacci pivot points. It incorporates the Fibonacci levels into their calculations. Is pretty much accurate, and they find the support and resistance levels. Okay, so the calculation is quite complicated. So I actually wanted to add it into the slide, but then it's already in an indicator, it's automated. So you guys do not actually have to know how this entire, all the pivot points that I was covering, how it's calculated. It's fine, it's not needed. Okay, I think somebody is asking another question. Okay, Hanin, you are asking about money management. What do you mean about money management? Do you mean risk management? Do share it into the chat. I can help to answer your question regarding that. Okay, risk management. I'll just do a quick one. So hopefully the others can benefit on that too. So let me clear this out. Let me take an eraser to clear this out. Is it not clearing? Forget it. Okay, so I risk 1% of my accounts. I only risk 1%. So let's put it into very, very simple terms. Extremely, extremely simple. So I have $100 in my account. Okay, maybe 1,000. So per trade, I only risk 1% of 1,000 times 1%. So every time I lose, let's say I lose the trade, hit my stop loss, I only lose $10. But if I have a risk to reward of 2 to 1, I'll get 2%, which is equals to $20 profits. So how do you calculate your lot size? How do I calculate the lot size for the 1%? So let's say I'll just draw it out. This is how a trading view looks like. So we have the stop loss level, the SL, the take profit area. So the SL, let's say we have a stop loss of 9 pips. 9 pips. but then including commission plus commission is equals to 10 pips. So we just take our $10 divided $10 divided by 10 is equals to 1. And then you take your 1 and divide by 10. So you get your lot size. So your risk amount divided by the pips you are risking and then divide by 10 one more time. This is just a manual calculation. Okay, let's move on to the Fibonacci one, the Fibonacci thing that we are talking about. So have I answered your question, Hanin? Okay, the pivot points levels are determined by calculating the pivot in the standard method. We have the calculation method is pretty complicated. I'll not get right into it. Okay, and why people like to use Fibonacci is because many traders use the Fibonacci ratios. They use it for retracements and as a place of where they would like to close their trade or take profit at Fibonacci levels. So I also like to use Fibonacci to determine to add confluence. Confluence, let me write it out in case my pronunciation is not that good. So to add confluence to my trade, I like to use Fibonacci. So I also look to the left of the chart, left to the chart, as in there must always be a reason on why there is a take profit area. Okay, okay, I'm not sure how to pronounce your name. I do apologize for that. Okay, you say you are a beginner. So I don't understand anything in day trading. Is this course okay for me or should I skip this course? Do stay around to listen. I can actually show you some methods where you can increase your chance of to have a better chance of a winning trade. I'll just simplify it down. Later I'll show maybe some form of smart money concepts, a very, very simple one later on. How I take it and I only take that kind of trade. Okay, next we have the Woody's pivot points. So it has a greater weighting on recent price data, very similar to the EMA, and it's used for intraday trading. So for Woody's pivot points, they are made up of multiple key levels calculated from past points. The key levels include the pivot point itself and multiple supports and resistance levels. So traders actually use these levels as a guide for future price movements when setting up trades. The calculation for the Woody pivot points differs from other pivots because it places a greater weighting on recent price data than the other variations. Okay, it's also widely believed that the high and low prices are a result of emotions in the heat of the battle, while the opening and closing prices are a more accurate representation of the mood of the markets. Okay, let's move on. I can open the chart again to present the Woody's pivot points. Okay, I think it might be this. Okay, we have my screen has all these lines. How do I remove it? Can you guys actually see the blue lines on the screen? Can you guys see it or is it only me? Do let me know all these blue lines that I'm actually looking at. There are some lines on the screen. You guys see all these lines right here? Oh, damn. Okay. I think it might be something to do with the drawings. Oh, wow. I got to... Okay, I found it. Oh, yes. Nice. Okay. Found a way to clear it. Hey, thank you for confirming that. Okay, for Woody's pivot lines, just like the PowerPoints. Okay, they like to sell. Where are they selling? They're selling at the first resistance, downwards, or they long it from the second support or the first support. My personal thoughts about all this, about entering like that, just by entering, oh, I have a buy limit set here, buy limit set here, stop loss below, buy limit. The thing is, I take it as it's some kind of gambling. I'll take it as this gambling, because if you just set your buy stop or your sell limit just at this level, along this level, waiting for price to go down, you are not adding confluence. What you want is multiple confluences to the left side of the charts, or multiple like confirmations that this trade might go in your direction, instead of just setting a buy limit, sell limit. I wouldn't do that. Okay, Woody's pivot points. Get to the chart. Okay, let's take a look. Since Woody's pivot points are for the intraday traders. Okay, no issue, continue class. Okay, sure. Okay, you can take a look right here. So, you have a short position. Stop loss at the second resistance. This is using the Woody's. I'll just write out Woody's points. Make it larger a bit. Okay, maybe 20. It's too small. 40. Okay, Woody pivot points as usual. 1-to-1 risk to reward. So you're just trading zone to zone, just like a Fibonacci. Zone to zone. The first support and the first resistance. Also, later I'll show you guys how I enter using smart money concepts, a possible way that we can implement it together. Or if you guys have any methods that you guys are currently using and that I might know, do send it over in chats. I might try to implement it in. So same thing here. People try to long. Let's say you long it here. Your stop loss must be a considerable area. It's up to you where you want to set. So if you set it right here, your stop loss hits. But let's say in a scenario where you set your stop loss lower, can you show how to calculate the pivot points? We are actually using an indicator. I'm not calculating the pivot points, so you can actually search it up. The indicator that I currently use is by Chris Waters. And it's under indicators. We do not calculate the pivot points ourselves. If you like to know the calculation, I actually want to add it to chart, added it to the PowerPoints, but I thought about it. I think it's too technical and it's something that majority of people won't be using. They won't be calculating. They'll just see it and they will forget about it. Since it's already in an indicator, so I guess the calculation is not needed. Okay, but thank you for asking, Ronel Ramos. Okay, so the indicator that I currently am using is pivot points by Chris Waters. So this indicator is actually quite good because in the settings, we can show the floor pivots. This pivot I'm not presenting. So we are showing the Woody pivots, the Fibonacci pivots, and the Camarilla pivots. So it's like an all-in-one indicator. So same thing with let's say in a situation where our stop loss wasn't hit. Let's say we set it right here, stop loss right here. In such a situation, we still want a 1-to-1 risk to reward. Okay, this was pretty good to the next resistance, 1.16. By something I would not like to do. I don't like, as usual, I like to say I don't like to hold my trades for. This took 6 hours. I normally like to hold my trade for maybe around 2 hours, 2 to 3 hours, and I'm out. If not within the hour would be best. Okay. Let me show you guys. Do you guys want to know there are formulas for all styles online. Yes, there are many. It's all online, but I'm sure nobody is calculating this by hand, right? Like you wake up in the morning, you decide to calculate the pivot points, start to use all the calculations. So you can actually search online, Kamavira pivot point calculation. So you can see the calculation is so complex. There's so many calculations to do just on that. I don't think anybody will be just calculating, will wake up in the morning, open their chart and calculate, right? You'll be looking at multiple currencies. That's why the indicators are there to automate it. So by the time you calculate all this finish, maybe it takes you 15 minutes to half an hour. By then, you would have wasted your time because I'm sure a few people are looking at maybe 4-6 currencies. So to calculate all this out manually by hand, it will take 2-3 hours. Please don't do that. Just use the indicator. It will save so much of your time. Just open, close, open, close. It's very fast. So do you guys want to see how I enter a trade? So yesterday, I actually took a shot right here. I took a shot right here. Okay, it's not showing in the, cannot show an example. Maybe I can show a reversal. Okay, let's say I actually took a reversal trade that hit my break even. So let us zoom in on the 5 minutes. What actually happened? So if you guys are actually using smart money concepts, it's actually very, very similar to how a pivot is used, how a pivot is presented. Okay, now we are already in the final parts of adding the pivots into the strategy. So for my personal one, I like to use smart money concepts. So I like to add it in. I like to add this into my trading style. So just now I was saying the high and the lows. So the low and the high, you can see this area, hit, tapped, reverse. This area, tapped and reversed. So yesterday, I actually entered a long. I wouldn't lie to you guys, I entered a long right here. I was hoping for price to continue going up to clear this high. Why did I enter that? What was my confirmation? So I took this area, which is the low of the pivot. So I'll set it as the sell side liquidity. So I saw that area got cleared and price went up even higher. I expected. This is the buy side liquidity, the high side. I'll turn off this first for now. Okay. So when price on the M15 charts, it cleared this high, this small little high right here, using smart money concepts. So I like to call this break of market structure. BMS is called break of market structure. Okay, so moving into the 5 minutes. So I actually use 15 minutes to get the overall grasp, the overall picture of the market, what is going on in the market. So moving on to the 5 minutes, charts. So this was the 15-minute high that was broken. Price went up even higher. I tried to implement my personal trading methods. And then what did I spot? I spotted on the 15-minute charts, market imbalance. So you can see this area right here, this area. Price previously did not come into that area. So I was looking for price to come down, tap that area before price continue going upwards to clear this high right here. But I did enter. I entered right here. I entered there. So let me draw out this area. I entered there. Where's my long? With my stop loss at the bottom. And I was looking to the top. So actually to the left, there was something. I already cleared the chart. So all the way to the left side of the chart, there was a point of interest that I was aiming. even higher than this specific area. So even for me, I do have my wrongs when I'm trading. It's okay to have wrong as long as you guys have a trading journal, you record it down. So the moment price came down, wow, I was looking at it yesterday. Price continue coming down. I know most of you guys, a lot of beginner traders, not you guys, a lot of beginner traders, when price start to go this low, or you start to close out your trade, then only for price to go back up, and then you will be thinking, damn, I could have held on to my trade and I wouldn't have lost money. So the moment price broke this area, broke that area, that low right there, cannot get the thing out. So the moment price broke that area, I set that area as the ideal invalidation level. What do I mean by ideal invalidation? To me, this area is no longer valid. The trade is no longer valid already. So I believe that if price broke this area, I was expecting price to possibly, I was just hoping possibly come back up before it continue going downwards to hit my full stop loss. So this is how I manage my trade. Not only do I have a stop loss right here, a take profits, a entry, I also have ideal invalidation. So you must know when your trade is not going right. You don't just hold your trade and you tell yourself, yes, price is continue going up. You see, it continue going up. And then in the end, it still went down and hit my stop loss. So I have an ideal invalidation level. So once I had two accounts. So one of my accounts, I set it to break even. My live trading account, price went up. I set to break even the moment price hit this ideal invalidation level. And thankfully, since we cannot control the markets, price could have just continued going downwards, hit my full stop loss. I set my trade to break even. What do I mean by break even? So I was just hoping possibly for price to come back up, and price did, came back up to my entry and closed at break even. For the other accounts, I have two accounts. For my other accounts, so I'm actually doing a challenge, a trading challenge. So on the other accounts, I actually cut off half of my risk. I closed off half of my trade right here and I let it run. So in the morning when I came to office, I took a look. Wow, price actually almost hit my stop loss, but it continued going up. So somewhere around here, I closed somewhere around here. So my take profit isn't that much. In the end, it was like something like this. It was pretty bad. It was only up around 9 pips and I just closed it out. I was busy with work, so I couldn't manage it. So I closed it. And thankfully, thank God I closed it. Price continued going downwards. And then it also cleared my stop loss. So this is just an example of how I manage my trade using smart money concepts and ideal invalidation level. It's very important to have that. A lot of people actually don't, when they teach online, they don't tell you anything about ideal invalidation. They just tell you to let the stop loss do its thing. But obviously, you still got to manage your trade when it isn't in your favor. Price is not going in your favor, especially in my favor last night. So can move on to another trade, a possible trade. Smart money concept. So we have this level. Let me take a look back. Just want to share with you guys one trade that I took. Okay, this is the one I remember. Last week I took this trade. So I took this trade right here, but I actually closed here. I did not close it at here. If I say I close it here, I'm lying right to the chat. So why did I close it here? Why did I close the trade there? So if you guys look to the left, there is what do I see? I always like to talk about the market imbalance level. And same thing, I will be implementing what we are teaching today, the pivot points. So we have the high, the low, the low, the high, the low, pivot points. So I set this as that day I was looking at this area. So this area right here, it's the 15 minutes market imbalance area. So I mark it out. What do I mean by market imbalance area? See, if you zoom closer, this area, price previously has not come into. So I'll set it as the red area for a possible reversal. So when I was looking, what I also like to do is, there's something that's why I don't use indicators. I'm just showing you guys plain how I look at a naked chart. You can see all my indicators right here are closed. How did I answer? I like to mark out the Asian range. So the Asian range goes from, let me check the timing. Okay, I'm using the New York UTC -4 timing. So I'd like to do is the New York time, the Asian timing, it's from 1900 hours, 19 o'clock. So I like to mark it out until 12 midnight New York time. You can see at the bottom, it's 000 hours. So I like to mark it out very clean. My chart is just like that every single day. So I mark it out black, mark it out as the Asian range. Top, center. So how did I know that price was going to go up? How did I know that? So we go on to the daily before that, to the daily chart. Let me get this out. What day was this? 13 October. So I actually took the previous day high. It was here. And the previous day low. Let me get back into the 15-minute charts. To apologize for that. Okay. So we got it right here. The trade happened on a Thursday. So this was the previous day, Wednesday, high and low on the daily chart. So just put that into perspective. Previous daily high. See, I like to mark it out. It's just like that. I don't use any indicators. Previous daily low. So PDH, previous daily high. PDL, previous daily low. So I just do it like that. And then I wait for the London session to start. So between the timing of over here, from this area to 2 o'clock, I do not touch until London session starts at 2 a.m. New York time. So I do not touch until it's 2 a.m. onwards. So what do we have here? Price, what did price clear? Price cleared the Asian low. Asian low. So I like to wait for the Asian session to be cleared, either the high side or the low side. So marking this out, we can say the Asian low got cleared. Asian low plus sell side liquidity. So this area got cleared. What do I mean by sell side liquidity? So in smart money concepts, we have this area. Look at this, multiple wicks. So many wicks to be cleared. So price cleared all of those together with the Asian low. And I was waiting for price to reverse. So price continue going up and it cleared this high. Take a look, it cleared this high right here. So I already marked it out. Break of market structure. Let's move on. So I waited for the 15 minutes to close before I start to look for an entry. So on the 5 minutes charts, since price already broke here, same thing, I like to enter by the market's imbalance. So on the M5, look at this very minute area. very minute area. Let me make it straight. So you look at this minute area right here. Very, very tiny. Let me zoom in all the way. You can see previously, price has not tapped into this area. So I set a buy stop here. You can see price actually tapped into it. Very, very tiny. Price tapped into that area. And then I set my stop loss at the very bottom. Why do I set my stop loss at the very bottom? Because there is another market imbalance right here where price could potentially come down to before it goes up. So I set it as that with my take profits up to the M15 market imbalance, and I just close it right there. This is the M15 market imbalance. You can actually see this, the high is the previous day high and the previous day lows. It's also a pivot point, a pivot high and the pivots low. So in a way, I'm actually also implementing pivots into my trading, just that I draw it out manually. Okay, and then it became a 1 to 2.42 risk to reward trade. Okay, do you guys have any further questions regarding this trade? Do let me know in chat. Do let me know whether you guys are interested to learn more about these smart money concepts. Maybe I can ask IronFX. Maybe we can have a session about it in the future. I can share more about it. Any questions, do let me know. This is how I actually refine my trade without using any indicators. Okay, yes, it would be great. Very nice. Any validity in the marks pivot? Oh, I'm not presenting that today, unfortunately. I do apologize for that. We are interested in SMC. Yes, SMC is very nice because there are no indicators involved. It's just a plain chart. I'm just using a plain chart without any indicators. Explain more about SMC. Yes, I like that attitude, that learning attitude. That's how I felt when I first saw about smart money and Wyckoff. Let me open this up. So for smart money concepts, it's actually quite, so you can actually have a better understanding, I would say a better understanding in smart money concepts if you read up on Wyckoff. Read up on Wyckoff. Let me type it out in chat. Read up on Wyckoff 2. Yes, the value gaps. The value gaps are taught by Inner Circle Trader. I think I mentioned it in the past webinars that I hosted. So Inner Circle Trader, I'll just credit him. Inner Circle Trader, ICT. He also taught about the fair value gaps, or also known as the market imbalance. So you can already see that I'm implementing. So this area, I took it as accumulation. So what is this? Wyckoff accumulation. That's why I asked you guys to read up on Wyckoff, where there's an accumulation area. So it better explains why on smart money concepts after it clears some liquidity and it continues going up. So for this entry, as what Stephen has mentioned, value gaps, the fair value gaps, I took it from Inner Circle Trader. And same goes to the market imbalance right here, Inner Circle Trader. And this high and low thing is also the pivot points. So you guys notice I actually developed my own, I wouldn't say developed my own. I combined multiple trading strategies before and backtested it first before I implemented it on the live account. Okay, explain more about SMC. You can actually learn more about SMC on YouTube. I'm sure quite a few YouTubers are actually teaching it for free. They don't charge anything. You can learn it for free online. Okay, moving on. You guys can actually screenshot this. So what happened here was there was actually a news. Last week there was a news, so let's not get into that. You guys want to screenshot this trade down? Do screenshot this down. So when you're learning smart money concepts, you can maybe look back on this and kind of understand more in depth on why I actually entered the trade the way that I did. Any more questions, do let me know in chats before we end this session. I'll check with IronFX whether it's possible to hold a smart money concepts session into the future. Read up on Wyckoff. So if you want to know more about Wyckoff, a very, very simple one, you guys can actually check out. Let me show you guys. People, okay, Doge. So you can see this is my personal trading account. I'll send it to chat. That is my personal trading view account. I actually did a short series where I did it on my own at home on the educational series on the Wyckoff accumulation. So it actually kind of explain why. What does it explain? Why price after it clears the sell side liquidity, why price continue heading upwards. So you guys can read this, a short little education thing, Wyckoff accumulation part 1 and Wyckoff accumulation part 2. You guys can follow me if you want. Follow me on TradingView if you want. I've sent it over into chat. Okay. Any more questions? Do let me know. So let me send the link of this also, just in case you guys want. Yeah, I'll probably be writing more. So probably on the pivot points and maybe smart money concepts. So if you guys want to have a short, like a quick summary on what is smart money concepts or pivots, I'll be writing it down on my TradingView accounts very, very soon. So stay tuned. If you want, just follow me. So I got only 11 followers. Oh, someone followed me. Thank you very much. So we increased to 12. Just follow me. I'll be posting more educational series for free. You guys can learn. Hey, thanks. No worries, man. Okay. Any further questions before I end this session? We have a minute left. Any more questions before I end? Okay, thanks. There are no further questions. Hey, thank you very much for following me also and for the support through this. Okay, now we got 13 followers. Very nice. Hey, bye. Hey, thank you very much for joining me today, as usual. My name is Chen Yongjing, and I hope you guys have a good day and take care tonight.
Welcome to another of our videos. Today we'll be looking at a gap. So, what is a gap? A gap is an area on the chart where the price of an asset moves sharply up or down. There is little or no trading in between. As a result, the bar or candlestick chart shows a gap in the normal price pattern. Traders can exploit these gaps for profit. Basically, gaps occur because of underlying fundamental or technical factors. Gaps can appear in the Forex market, but they are less common than in other markets because currencies are traded 24 hours a day, 5 days a week. However, gaps can occur when economic data is released that is a surprise to markets. Also, gaps can occur when trading resumes after the weekend or a holiday. Although the Forex market is closed over the weekend, the market is still open to central banks and related organizations. So it's possible that the opening price on a Monday morning would be different from the closing price from the previous Friday, which results in a price gap. The difference between the open and closing prices is the gap. If Monday's open price is higher than Friday's closing price, the price gapped up. If Monday's open price is lower than Friday's closing price, the price gapped down. There are 4 types of gaps. The first one is known as a common gap, which represents an area where the price has gapped. The second type is a breakaway gap, which occurs at the end of a price pattern. It signals the beginning of a new trend. The third type is a continuation gap, also known as a runaway gap, and occurs in the middle of a price pattern. This gap type signals a rush of buyers or sellers who share a common belief about the price future direction. And the fourth type is known as an exhaustion gap, which occurs near the end of a price pattern. It signals a last attempt to hit new highs or lows. Thank you for watching.